Stock market weekly chart review for August 29th through September 2nd. Before we actually look at the stock charts, let's look at the S&P 500 and the portfolio composition of the S&P 500, because we will use the S&P 500 as a bit of a proxy for the overall stock market. The S&P 500 is made up of around 500 stocks. Fidelity has it at 507. And so by looking at one chart, we can get a general idea of what the overall stock market's doing. Whatever the overall stock market's doing tends to put weight on an individual stock that you may be looking at, even if it's not in the S&P 500. The stock market adage is a rising tide raises all ships, so a lowering tide lowers all ships. So the S&P 500 portfolio composition. We see here that the top 10 stocks of the S&P 500 would be Apple, Microsoft, Amazon, Tesla, Google again, Berkshire Hathaway, United Health Group, Johnson & Johnson, and Nvidia. Now take note that out of those 10 stocks, 3 are not technology stocks. Out of the top 10, that means 7 out of the top 10 are technology stocks. So right now, whatever's happened in the tech sector is putting a big impact on S&P 500. And right here is sector exposure. So a stock sector is a group of similar companies. For example, we see a little less than 28% makeup of the S&P 500 is stocks out of the technology sector. Around 14.3 is healthcare stocks. Consumer discretionary stocks make up almost 11.5% of the S&P 500. Now this one is a little interesting. We got real estate listed twice. It used to be the financial sector here at 10.63, and real estate was still here at 2.83. So that's a mistake. It's not a mistake. I don't know, but we got a way we're going to compensate for that. So we're going to look at the top 4 sectors with a 5th caveat being financials, because I'm not sure if this is a mistake or not, so whatever. We will look at those ETFs, correlating ETFs. So XLK is a correlating ETF for the technology sector. XLV is an ETF for the healthcare sector. XLY is an ETF for the consumer discretionary sector, and XLRE for real estate, and XLF for the financials. Let's get into looking at what happened to the S&P 500 this week. Now we are looking at a weekly chart, so each of these bars, called candlesticks, whether it's red or green, represents 1 week of trading time. On most weeks there's 5 trading days, so this represents, one of these candles here represents 5 days of trading, and we're looking at a 2-year time frame, right, from here to here, 2 years. This red and green stuff down here, this is volume of transactions. So when we look at this week, we see there was a compared to the last almost 8 weeks or so, there was a pretty big uptick in the volume of selling. This next thing to look at here, this is a 200-day moving average. It is an average of the price, closing price for the last 200 days. Doesn't always have to be red. I like it red. So we see that now, in this one here, kind of bluish line, this is the 50-day moving average. It is similar. It's average of the closing price for the last 50 days. Doesn't have to be this bluish color. I just chose that. Now our S&P 500 about 3 weeks ago got up to almost touch the 50-day moving average and has been going down ever since. We're basically right in between these two with this week's candle. We'll zoom in and take a look at this week's candle. We see prices opened here. All right, so it kind of gapped down on the open from here. During the week, it traded as high as it closed last week, but sellers pushed this down. It traded as low as this, what is that, 390? Traded as low as there, but got bumped up just a little bit to 392. Now, when we look to the left, we see that there's a lot of price consolidation in this area. So when your stock, when the price is on top of this consolidation, this consolidation area would act as support. Below it, it acts as resistance. So right now, it seems to be doing that. We saw that this downward move started with, look at that's a small body candle. This one is a bit of a longer body candle. Now this one, the body of this doesn't seem as long, but it's still a pretty big candle. Now let's look at technology. Looking pretty similar, right? As far as a big uptick in selling volume, right in the middle of the 50-day and the 200-day moving average. Prices gap down, almost got traded almost as high, a little bit lower, tried to get up there, but the selling just pushed it down. Also, look, we're in this kind of price consolidation area here, so it seems to have a little bit of support. Also similar, started with a short body, we got this long body candle, another long body candle, maybe a little shorter than that, but still a long body candle. Healthcare, a little different look, even though our volume is the same, right? A big uptick in volume, a little closer to the 50-day than being in the middle than the other two. And one of the a notable difference, right? Our past candles look a little different, but we see this body in the healthcare sector wasn't as long, and we had a little this longer wick. So opened here, traded us up as high as here, the wick on top, but selling brought it down here. And it sort of seems like, see how many times or touched this sort of area right here. There was a touch here, look at that touch here, kind of a touch here, look at right around in that area. Yeah, a little lower, touch there, touch there. So it seems like this 124 there might be something going on there also, although it wasn't as it's not as clustered as the prices are here. Sometimes when the momentum starts slowing, you'll see you'll have this like wide range candle, then you start slowing down, and the candle could start slowing. So maybe for the healthcare sector, maybe the selling is slowing down just a little bit. We'll see next week. Obviously, consumer discretionary, we notice a very similar thing. We got one wide range candle, and this one is kind of looks like a doji, with a big uptick though in the selling volume for this week. We're a little closer to the 200-day moving average than the other ones, but kind of in the middle. Take a closer look at that. Yeah, kind of like this doji, right? So prices opened here, closed here, but there was a little bit of wiggle room as far as where they so this one right here, that's super close to where it opened and closed on almost the same spot. But there was a wide range, but it looked like it went down just as far as up and kind of closed in there. So kind of this doji-ish looking thing. Sometimes dojis start forming when the momentum is slowing down, indecision. What can happen sometimes is that similar to here, there's this big drop, kind of looks like a doji, and sometimes things are just digesting, and then look at all the selling that came in. Similar over here, right? Prices dropped, shot up here, kind of like this doji, and then just drop back down again. So there might be a little bit of a pause, but which direction is it going to go? Real estate. Real estate, we're continuing with these long candles. Volume spiked up, getting closer to the 200-day, but still sort of in the middle, but nearing that 200-day. And look at that price kind of consolidation around there, kind of touched back here, so maybe hitting a little bit of support. Financials, a lot of volume, not the widest range candle here or here, but nonetheless the prices have been moving down, just not with as much momentum like in one week of trading down, right? And maybe you can consider this like a little bit of consolidation. It's a little lower, but maybe it's kind of all throughout this range right here. But overall, we'll quick look through all these, okay? There's the financials. Real estate looking very much to the downside. Consumer discretionary looks a little more like that, right? A little closer looking. This is kind of a mixture between the look of this, right? Because this one didn't have as much of a wide candle, but it's getting that lower candle here, and then the tech stocks. But remember how much weight the tech stocks had in the S&P 500. So what might end up happening is the S&P 500, the technology stocks putting a lot of weight on things, pushing things down. So maybe stuff like this doesn't really have much to help it go up. So potentially I think we could be looking at least potentially a retest of around this 380 area. That would make sense, because we got seems like this selling isn't ready, by looking at the candles, isn't ready to slow down quite yet. And there's nothing, it's only like a 10-point difference between these two. Yeah, there's a little bit of support there, but if there's a lot of momentum, or maybe kind of could start basing, but I wouldn't doubt it if we saw a touch of 380, or even go past and end up, I don't know if it would be next week, to touch the 200-day moving average would be a lot of selling, but it's not off the table. I think what would be more off the table is for it to shoot up to the 200-day moving average in 1 week. So I think either maybe a bit of a sideways week or more downward week is probably what we can expect for the S&P 500. I want to leave you with this risk indicator that I've been watching for quite a while. You see it's in this low with green, which is 50 to 100, moderate with yellow from 100 to 200, high orange from 200 to 300, and extreme high risk 300 plus at red. So we're in the lower end of the high risk, and we have been there for a while. A couple back here at August 29th, I started charting it for the purpose of putting on the video for you, but usually I check it twice a day. I'll check it in the morning, I'll check it after the market closes. But I realized since there's not a chart, hard to look at it. And you see, since I started, we've been the lowest was 210.10, highest was 220.30. It dropped down a little bit on Friday, but nonetheless, it's still in this low range of high, right? Low being between 200 to 300, or 220, 210. That's still in the lower end of that. What does this mean? Well, in the past, what I've seen happen is it was in this green area and the stock market was dropping. and then very shortly the stock market shot up, right? But right now it's in this high. So to me, it's not like giving me a guarantee of anything, but what it tells me is that what I'm using it as is to kind of confirm it's probably likely that we could see more movement to the downside, or at minimum having a struggle to go to the upside. Final thing I will leave you with is go to iofsuccess.com. You want to find out more about me, hit the submission page. You can read all about me in relationship to a brief history of what's happened to me with trading, the I Have Success mission, and there'll be a link to in the description below. There'll be a link to this website where you can download any of this stuff, different things, and when I put something new on there, it'll be emailed to you. Also, there'll be a link in the description to watch the playlist of this. And with that, my friends, you guys have a fantastic day. Bye-bye.